Hi, welcome to this video. It's 22nd of May. It's Wednesday. Just going to be looking at some trade setups today, which will include the euro. We're going to be looking at euro GBP, euro USD, and euro JPY. Now, we have done videos on euro USD and euro JPY in recent weeks, and just going to give an updated view on those two pairs. We haven't looked at euro GBP in a video, though, so I'm going to look at that one as well, which I think looks an excellent risk to reward trade. Now, in terms of the euro, there's some key events coming up for it. We have PMI manufacturing data tomorrow, which will give an indication of the health of the Eurozone economy. And perhaps an even bigger event for the euro is going to be the European elections on Sunday. What we're going to do now is look at the charts and discuss technical levels, the sentiment and fundamentals behind the chart as well. So let's go and take a look at them. But please do keep in mind, when I'm giving my view, it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques and our daily technical sentiment analysis of 14 major forex pairs, including the three we're going to look at right now, you can get live access to our member center on the link beneath this video. Right, let's go and take a look at the charts.
On the chart of Euro USD, the daily chart, and just draw my levels in a moment. I'll just give my reasons for noting those rallies there. Now, in terms of from a technical perspective, the euro, just using technicals or looking at technicals, doesn't look that exciting. It's low volatility, spiky price action, and pretty choppy. But the fundamentals and sentiment behind the chart, it gets a lot more interesting in my view, because I think the euro upside severely limited. Its downside is big. We're looking, if we can break to new daily lows, from move down to 108, then 104.50. But let's have a look at the fundamentals behind the chart first. Now, in terms of the euro, big fundamentals are clearly bearish. Negative rates, stimulus, they're printing money. They're probably going to be printing more soon. They've got a slowing economy that's near a recession. A lot of people in the market actually think the economy is going to recover in the months ahead. It's not. It's going into recession, in our view. You've also got political tensions as well. On the other side, USD interest rates are obviously pretty good. And you've got a better economy. That's clear from the data, despite what a lot of people in the media say. And it's got reserve status. When I say reserve status, it's the global reserve currency. It's a safe haven. Got risk on at the moment. If we've got a risk off, then the USD will just basically really gain traction to the upside. Now, in terms of the Fed, we had the Fed minutes today. They point to a neutral stance on rates, no cut. A lot of people in the market looking for a cut, but no real reaction in this pair at all. So the big fundamentals are clearly bearish, okay? But of course, prices can spike around in the short term, and we do have two events coming up which could make the price action a little bit spiky. PMI manufacturing data is out tomorrow, and the market is expecting it to come in at 48.1 against 47.9 previous. Okay, now for anyone who doesn't know this data, it's really seen as a barometer of the health of the economy, but any number under 50 indicates manufacturing in contraction. So 48.1, if it came in at that level, does it really matter? It's only slightly better than 47.9 or 48.5. It just doesn't really matter unless you see a really big move up in the data. But the data could actually be worse than forecast. Why? Because just go look at the relationship between Eurozone and China and how China's impacted on those PMIs over the last few months. And it's been a big impact. China is continuing to slow up. I think you could see worse PMI data than expected. That might have the potential to drop the euro down. Okay, need to get through this daily low, but any rally is going to be limp. Okay, in my view. I'll do the levels in a moment. We've also got euro elections coming up. I think that this is the key event for the euro, because a lot of people in the market are underestimating the importance of these elections. I've seen a few sensible commentators say this, because the anti-EU parties, how much vote share are they going to get? They're forecast to get 30%, okay? so they can cause a little bit of havoc in the parliament and basically slow things up, delay things, etc., etc. They're not going to win the parliament. However, 30%, that's pretty good. Could it be more? It could. Watch France closely, because France is the key country to watch. This is from a sort of confidence point of view in Eurozone, because Macron's party is already behind Le Pen's anti-EU party. And Macron is the guy who really wants EU integration, etc., etc. If he gets heavily defeated, that will undermine confidence in Eurozone. It'd be interesting also to see what the anti-EU parties get in Germany as well. The market just doesn't seem too concerned about it. But okay, let's say the anti-EU parties don't get as much as 30% or 30%. That's not really going to boost the euro much, is it? Because no one seems too concerned about it anyway. But if it's a big shift to the right, I think that could be or would have a big impact on the euro. Now, in terms of the chart, let's do some technicals. I've noted these rallies. Someone I saw did some research on these rallies and the volumes that hit the euro. Big money coming in and hitting any of those rallies hard. Now, the reason that is, of course, that the big fundamentals are so bearish. So you have big money waiting on the sidelines to hit rallies. Okay, so if we get a rally, in my view, it's going to get hit. Now, in terms of upside, I don't know if I said it earlier, just severely limited in my view. Downside is big. You've got to take out this tail here, but not only the tail. You've got to get through this round number. So 110.80. A lot of turbulence around round numbers, I always say. Just get the round number out of the way if you wanted to sell a breakout lower. If we broke out lower, then I think you'd see a move down on higher volatility, 108, 104.50. Okay. Now, what about a rally? PMI's a bit better than expected, bit of a rally. How far could we go? My own view is you've already got a level at 112. Okay. That could be taken out. If you got through 112, if you wanted to sell, you could sell back through the round number, 111.80. Okay. My sort of view of it is we could get above 112, obviously. I put my stop. Our position hasn't changed since the last video. It's 113.80 in, but we have moved the stop to 112.80 behind these tails. I think they'll be hard to take out. If I was taken out, what would I do? If she ran on to 113, I would hit her straight away with a stop back there behind those tails. I wouldn't wait for too much confirmation, let's say, because these rallies, they've all been hit with big money. I just don't see much upside. The big money's going to come in and whack the euro hard. Unless those big fundamentals turn around that we noted, then the euro's a sell on any rallies. Okay, it hasn't broken lower yet and gone into a nice big downtrend as we're hoping, but that's getting close. I view this as quite a low risk trade actually, because you're picking up a nice carry when you're sitting on the shorts. So 113.80 in, we're at 111.63. It's not a big move, it's just a few hundred pips. We've got decent carry and you've got low risk. I like this trade just simply because I view it, low risk and potentially very rewarding on the downside. If we break out to the downside, I will be adding to my position. Right, let's shift to the next chart, which is going to be Euro GBP. Just on the daily chart, Euro GBP, in our view, Euro fundamentals, as we said, we think they're bearish. And in terms of UK fundamentals, obviously there's a better economy. The UK economy's got better data coming out. It's clearly stronger. Interest rates also favour the UK, both now and going forward. The UK will probably raise rates in the next few months, but It's all about Brexit, isn't it? Now, Brexit main driver for the GBP, but is the bad news priced in? Well, we've got Theresa May, UK PM, to resign, her deal not to go through, obviously. A hardliner to take over, like Boris Johnson being the clear favourite, and a high odds of a no deal. Bad news is priced in. I think this was all around yesterday. We've seen a bit of follow on today, but I think the buying in the euro is now going to exhaust. Also, I think, market. The problem with Brexit is there's always a hysteria about it. Obviously, it's very newsworthy. High odds of a no deal. The odds are still pretty low, actually, because it's the will of Parliament, the MPs, to want a deal, okay? And actually, both sides want a deal, the EU and the UK. They just can't agree really on the Irish backstop, but they'll come to a compromise on that, okay? Um, and this is just my own view. What they'll do is they'll just do an invisible border like you've got between Sweden and Norway. It's the obvious way to solve the problem. Few people have spoken about it recently. That would be palatable to the UK or Parliament and the EU as well. So our view is a deal will be done, but in the short term, maybe a deal won't be done longer term. But in the short term, I just think, the bad news is in the price. It's still till October to agree a deal. But of course, the pound has sold off hard. And just before I draw my levels and do my technicals, if you want to look at my Facebook page, I'll put a link beneath this video. I post charts there and news and sentiment and comments and so forth. Do it on a daily basis. You just find the link under this video. You'll also find the link to our Facebook group as well, where you can interact with around 700 other traders. It's an active group, a lot of good information in there. If you're a beginner, if you're experienced, just join on the link beneath the video. Right, now the technicals. Now, obviously, it's one-way traffic as we come up, just a sea of blue, isn't it? But we're coming up to resistance. Now, on the daily chart, that is the resistance. It's just above 88. Now, on the weekly chart, I'm not doing the weekly chart in this video, but if you look at it, you can see there's clear resistance around the 88 level, and this is only a few pips above. Now, we did, sorry, there's someone Skyping me. In terms of yesterday, we did come down and we immediately came back up. A little bit of follow through today, but we're off the high, but it's not big buying, okay? Where would you go short if you wanted to come in? I wouldn't give it much confirmation, actually. The bad news is in the price, and obviously, we've got those events coming up for Eurozone as well. Just draw a trajectory through there. I'd ignore that tail now, and I would simply come in through here, which is basically, you can see it, tail, body, body, and beneath that body, get through the low, and that is about 87.80. And then your target initially, or my target initially, is just down towards this support zone at 85. Okay, where would you put your stop? I've already got a small short in, actually. I came in yesterday, just got in at 88.60, but I want to add, I've got mine at 88.80, well clear of the two tails. Okay, so that's the way I'm playing it. I'm actually looking not just for a move down to 85. I'm looking for a move down longer term to 80. I think the euro has got a long way to go on the downside. What happens if she took my stop and went up towards 89? I just look for any signs of failure up at 89. I'd go back behind 90 probably. Obviously I'll cover that on my daily updates, but if the move is overdone, I think it's a good risk to reward. It's about 4 to 1. I really like the look of this trade. Right, let's go to the last pair, which is going to be Euro JPY. Right, from the last chart, Euro JPY, just do some levels in a moment. But first of all, fundamentals. The yen is the most oversold of the major currencies, deeply oversold. It's got no big downside for us at all. We've been bullish for a good while. And yeah, the main bearish fundamentals has been negative rates in Japan and their big stimulus program of printing money. But that's at its limit now. They've already made small reductions in stimulus. They're going to make more. So that negative fundamental totally priced in. Okay. Also, Japanese economy is not doing too badly. But I think in terms of a really bullish fundamental for the yen, it is a safe haven currency if we go to risk off. But it has a massive current account surplus on it. Okay, so the Japanese are the biggest overseas investors in the world. I think it's about 500 trillion. And a lot of it is in Eurozone. And with the Eurozone the way it is, a lot of that money is flowing back and more will flow back, which will boost the yen on the euro or push the euro down on the yen. This has been a pair we've liked for a while, and we think it's a fantastic long-term trade, or it's developing into one. Hopefully, now I've said that, it won't be ruined. But we came in at 125.80, and basically what we like, if we're looking for a currency to turn down, we like this 20-day moving average to snap, which it does. And then we're looking for it to hold rallies. So you can see it here. We come up, we touch there, we don't touch there, and we're red. Now, in terms of that touch, I think we've had the test, we should be going down. But also what I like about this average, it's also lining up with the 200-day moving average as well. So in terms of this trade, you've got really clearly defined risk to reward, okay? The resistance is here. It's big resistance. It's a round number behind the 20-day and 200-day moving average. We're at 123.09. I would just simply sell through the next round number, which is 122.80. So what you can do is really take out the previous blue tail there, okay? And then see if she runs. Now, where would you put your stop? I think your stop wants to be there, back behind. You can see those two candles. Well, I've drawn the line in there now, but the two candle tails, there was a gap before. So something like 124.60 would do it. So 124.60, 122.80 in, and then see if she runs the downside. And I think, in terms of a downside target, it's 115.50 for us, then 110, and then longer term 100. I think this is going to develop into a really, really big downtrend. Okay, I like it that the yen hasn't gone down in risk on. It's pushed the euro down. I'm really looking for risk off. So that's really going to boost the yen. Just across the board, not just on the euro. But I really like the look of this pair. I've been in it a little while. I haven't got too much out of it. It's only about, I don't know, what is it, 100, 280 pips, something like that. But it's not bad. Considering we've had fairly low volatility in the markets, but it's going to get a lot bigger than that. This trend for me is just beginning the downtrend. It's come down. We've had a natural rally, then down. That's what I think anyway. So I think she's a good sell as well. So that's the video for today. And as you can gather, pretty bearish of the euro. Sell the rallies and sell breaks lower in my view. Thank you very much for watching me as usual. Take care. Have a good day.